All right, we definitely will. Abigail, thanks very much. And let's bring in Gina Bolvin, president of Bolvin Wealth Management, for some more assessment of the markets and the profit picture right now. Gina, great to have you with us. I guess I'll start with the earnings story. From what you've seen so far, what's been your reaction?
Well, it's been another better than expected earnings season, and like your guest just announced, it's been an 81% beat rate, so it's been pretty good. And we're not even halfway through earnings season, so corporate America and consumers have been incredibly resilient, and we think that's going to continue.
But the reality is you've seen quite the jump here, both in the S&P 500 as well as the NASDAQ 100 and Composite. How much more upside really is there?
I know, that's a good point. Coming in January, we really thought that the market would be up 15% this year. That was our base case. But we thought it would be at the second half of the year. You know, we do think it's going to continue to be a strong bull market. The average bull market is about 5 years. But you're right, and we wouldn't be surprised to see some short-term volatility here. We have some seasonality coming into play where August is actually one of the worst months for the market. All of Europe's on vacation for the month. It slows down in the U.S. We also are not going to get some more strong seasonality until the back half of October. And let's not forget what's coming up that could really roil the markets like it did last August, which is Jackson Hole. The Fed may have to reorient investors like he did last year, and he sent the S&P down 3% and the NASDAQ down 4% in a day. So it'll be interesting to see what happens in the back half of August.
Yeah, we'll certainly have to watch that central bank speak. Abigail was telling us about some of the big tech earnings to watch for this week. In terms of sectors and where the money may flow from here, what have you been watching, Gina?
So one of our best ideas right now would be industrials. We think there represents a lot of opportunity with the reshoring trend. I do like technology. I know that we're focused on what Amazon and what Apple are going to do for earnings, but those are really good long-term holds. You know, it's hard to be bullish on the market and not like technology, because technology represents 30% of the entire market. So even being neutral on technology, which is what we are right now because it's come so far, that means having a 30% weighting. So that's a big weighting in your portfolio. And I think there's some opportunity with small caps. They're up today. They have underperformed the market, and we see some opportunity there.
I feel like this small cap rally has, been the rally that everyone has been waiting for years now, really. At what point do you see things start to really turn around here for the small caps, especially given the lag they've had to other parts of the market?
Well, one of the reasons that they've lagged is because everybody's been expecting a recession. And small companies, which make up a lot of unprofitable companies, are very sensitive economically. And now that we're starting to see a much higher case of a soft landing and sidestepping the recession, it seems like they really could do well here. It might be early, but, would you rather be early or late? I would say it might be a good time to step into small caps and even some mid caps.
And on that idea of a soft landing, Gina, what's your view?
I think that if there's any case for a soft landing, it's going to happen. I think, when we saw that GDP number come across, when we started seeing core PCE softer than expected, I think it's really hard to bet against the consumer that has jobs and rising wages. And I think that it's more probable than not, and I think we're going to get a soft landing.
Regardless of a soft landing or not, I mean, if you look at kind of the bullishness in the market, Gina, real quick here, what can set the market off course at this point?
You know, the Fed, I think that, we all know that the Fed is almost done, but he could raise 25 or another 50. And right now, the market is betting that there's only a 20% chance of a 25 basis point hike. That could be one thing, but jobs, I think it's going to be interesting to see what happens this week with the labor market. But I really do think it's about the consumer. The consumer is 70% of the economy. And I think the consumer and business resiliency has been underestimated. And I think that the next 12 to 18 months, couple of years, this bull market is going to continue, but we should expect some volatility because even bull markets have corrections.
That's Gina Bolvin of Bolvin Wealth Management Group. Thank you so much for your time.
Thank you for having me.
Coming up, SoFi stock is soaring after topping estimates.